Yo, what's going on, buddy? Hope you're having a lovely time. In today's video, I want to talk about a dynamic risk strategy that can help you to get rid of every losing trade. And yeah, it's a very simple mathematical formula, and all that you need is a strategy with a high accuracy that can offer you a minimum of a 1 to 2 risk-reward ratio or a 1 to 3 risk-reward ratio. This dynamic risk formula uses higher risks after a losing trade to get rid of the previous losing trades. It's as simple as that. For the 1 to 2 risk-reward ratio, we have a 5 positions sequence. So that means that you have 5 chances to hit a winning trade to make money. Like, you can lose like 4 trades in a row. If you hit the 5th trade, you get rid of all the losing trades, plus you're going to have some money in your bank account. Easy as that. That's how it works. It's very simple maths. Everybody can use that. You can create your own dynamic risk formula depending on the strategy that you have and depending on the risk to reward and whatever you're looking for in the market. Really depend. Like, you can use this formula with every kind of trading strategy that you can think of, as long as it offers the risk to reward ratio and in best case scenario of very high accuracy. Because if you don't have a high accuracy with this system and you are going to face a lot of losing streaks that go beyond 5 trades, 5 losses in a row or 7 losses or 8 losses in a row, then you are going to struggle with this dynamic risk formula and you're probably going to lose money, because after losing trade you have to risk more in the next trade. And yeah, that's how it goes. For the 1 to 2 risk reward ratio formula, the $500 dynamic risk formula, let me go over it real quick. So let's say you have a $500 account, okay? So you risk 1% in your first trade, okay? Which is $5. If you lose this trade, on your next entry scenario, you are going to risk position 2, $5 again. If you would win this thing, you would make a total profit of $5. You've lost $5, then you made $10, so your overall $5 in profit, right? Let's say you lose this one again. You've got to go with position 3, which is $10. So you risk $10 to make an overall of $10, right? The same thing with the $20. So if you lose position 3, you've got to risk $20 in the next trade to make $20 overall. That's how it goes. If you win this trade, you're gonna start from scratch. That's how it goes. So if you win, you always reset the sequence and you start from scratch. Very simple mathematics, guys. Let me show you how it works with the 1 to 3 risk-reward ratio, because if you have a system that gives you a 1 to 3 risk-reward ratio, and you can generate out of 7 trades, you can make 1 winning trade, then you are going to print a lot of money with this formula, because now you have even 2 chances more. So you start with $5 risk in position 1, then you go with another $5 risk. Then position 3 is $10, position 4 $10, position 5 $20, position 6 $20, position 7 $30, okay? This is what you are going to risk. If you lose a trade, you go to the next position. That's simple as that. And yeah, if you have a system that can make 1 winner out of 7 trades, you are going to be profitable with this strategy. If you lose 7 trades in a row, you've got to start from scratch and take the loss, because if you keep on using higher risks, yeah, it's dangerous. You could burn your account. So it's better to take the loss, start from scratch, and then work with the 7 chances to make a winning trade, to get in profit, and then yeah, just try to hit as much winners as possible, and then you're going to print money like crazy with. That's very simple mathematics. But if you have a statistical edge, if you have a strategy that works with a high accuracy, this can be very beneficial. I suggest you to learn the X-ray strategy, the index strategy from the Genius Trading Masterclass course, because these strategies, they have very, very high accuracy. I mean, yeah, they are very specific. You might not have as many entries as with the extreme zone strategy, but I think in terms of accuracy, they are much more accurate and you're not gonna face huge series of losses because the nature of the strategy is very accurate. These are sniper entries, and yeah, you should really take a look at the Genius Trade Masterclass course to learn these strategies if you want to use the dynamic risk formula. Of course, you can use it with the extreme zone strategy as well, because you have, like, especially if you are focusing your trading decision based on the A setups from the extreme zone on DAX, you just focus on A setups, because A setups give you a very easy 2-to-1 risk-reward ratio even before the middle line gets hit. Slightly above or slightly below the white line where you normally would go break even and take the first profits, this is where you could close like a 2-to-1 risk-reward ratio with the extreme zone strategy. So if you're using it on DAX, I would suggest you to focus on A setups and don't trade against the trend, guys. That's very important. If you see the market is moving in one way, don't try to hit the top or the bottom of the market, okay? That's very important, because if you take like 2-3 losses in just one single move to the upside, it's very hard with the dynamic risk strategy, okay? You really need to read the flow of the market. If you are in an uptrend, don't try to sell the top of the market, because the market can move longer in the opposite direction than you can pay for that, okay? It's very important that you don't trade against the trend. That's very, very important. If you have a strong trend move to one-sided trend move, let's say the market moves up pretty aggressively on DAX, wait for the market to make like a strong rejection, and if it comes back, then you can try to sell it. But don't sell into the strong move to the upside. Don't try to hit the top of the move, okay? Wait for a clear pullback that breaks structure on the 1 minute, maybe 5 minute chart. You want to see like a break of structure. And if it pulls back after that, then you could try to sell it. But don't just push the button if the market is still flying, okay? Same thing if it's falling down like crazy. Don't try to hit the bottom of the market. Wait for a sign of a reversal and then a little pullback before you step in, okay? If you're using the extreme zone strategy, A setup in combination with the dynamic risk formula, okay? So, yeah, that's what I want to tell you guys. Very easy. If you want the 1-to-3 risk-reward ratio formulas, this one here, I have it onto more than $1 million accounts. So I've calculated everything for you. If you want, I can send you a PDF for the 1-to-3 risk-reward ratio, and for the 1-to-2 risk-reward ratio, I'm going to send it to you anyways. And then you can play with it. You can create your own mathematical formula. You can tweak the numbers as you want. I mean, this is just an example of how you could do it. You can do it a different way. You can use different numbers for your risk appetite, for your capital. Maybe you want to start with 0.5% of risk, or a 0.25% risk. This is up to you, okay? I suggest you to play around with it, test it, use the market replay function on the CTrader platform to try it out and test it if it works. Maybe you have a different kind of indicator strategy that can work with this dynamic risk formula. Maybe you're using Bollinger Bands, or you're using Fibonacci retracements, or maybe you're using RSI or moving averages, or whatever it is. Try it out, test it out, see what works for you in your market to your specific time that you have time to trade. I think this dynamic risk formula can be very beneficial for you if you guys have a high accurate system, and if the probability is high that you can win 1 out of 7 trades or 1 out of 5 trades with a 1-to-2 or 1-to-3 risk-reward ratio. If you can do that, guys, yeah, you're gonna print shitload of money. That being said, I wish you a lovely day. I hope this video was insightful, and I'll see you in the next one. Take care, buddy. Peace. you.